Hello friends, welcome back. Today we are just going to talk about the cumulative delta. As we have seen in the previous video, footprint charts. Delta charts and cumulative delta charts gives us a story. And this is the story. We also described that each bar has a value pattern and how it interacts with the delta and cumulative delta. We can formulate opinions. So what we have done on the right side, we have taken where the background is light green, ES, NQ, YM, and I should have done RTY, but these markets. So you can track your, let's say you want to use energy market to trade. So you can have your heating oil, NGCL, all those symbols. There are 4 or 5 symbols, and how they interact with each other and create the cumulative bias. So same thing I'm doing it for the financial future market. As you can see here, ES, NQ, YM, you should be using RDY here. And then what we are saying is, since SPY has the top 500 companies in America based on their business value, let me show this chart. What I'm saying, business value, what we do is, here I have 3 stocks. I'm comparing their financial metrics quarter over quarter and see which one is giving us a right opportunity to invest into and creative structures of bias and long-term investment portfolio. So here we have revenue growth, gross profit growth, EBIT growth, operational income. There are 100 ratios like these. I'm just showing you 15, 16 here, and then we have EPS growth, diluted share growth, right, and all these things, and then financial operating cash flow, 10-year revenue growth, growth per share, and then we have all these 5-year shareholder equity growth per share. So the point is, this is what's going on when the big hedge funds are investing and they are looking at. I'm just showing you 20 ratios. We have 120 ratios we look at, and we have to do this across the board. We do portfolio optimization. I'm not getting into quant analysis here, but I'm just trying to tell you what's going on, right? So you can look into it very quickly, and you can look into the relative values. Now you think about it. If a company has 100 employees and if they make $1 billion, other company has 1 million employees and they make $1 billion, which company will you invest in, keeping all the factors pretty close? Think about it. So this in one of the stats we look at is per employee income. So what does it tell you? That a company can make $1 billion with 100 employees, has a low overhead. They're operating, maybe a software company, right? They just have a unicorn growth. Or it could be a financial companies. If you look at that, if you have automated models running and doing automated trading, if you have 100 accounts, one employee can manage 100 accounts, and they can all make $1 million a year, right? So this is the reason why all these ratios over time, quarter by quarter, year by year, has to be looked at. All right, this is long-term positioning. Nothing happens without any effective analysis. And then what's going to happen next? We can do Monte Carlo simulations. We generate 10,000 simulations, and then we establish these matrices again and say, this is where we're expecting things to go. We can also get into AI and deep learning models where we can teach all this to the deep learning neural networks, and they can also start looking at. And then this is how long term you can make some smarter decisions, and you can create your own metric as well, right? So CPAs, quant models, well, CAPM models, there's a lot of then if I give you 100 stocks to analyze where to invest right now, this is where the portfolio theory and optimization comes into picture, right? So they all teach you all this in quant. So I went off tangent just to make a point. These kind of things may not be usable for a short-term intraday investor, right? Intraday investor needs this footprint. Footprint is, this happened. Only once the bar closed, we know what happened. That's all there is to it, right? All right. So this S&P should be SPX and SPY is good. Even you're trading ES on the left side, I have ES. Here I have SPY. Here I have the top company stocks. So that I went off tangent because these are the companies which have in the SPY index the top holdings based on their weightage. So when the 12%, 13% of the stocks are in 500 stocks weightage is these stocks, when they move in one or other direction, we want to see the clues where S&P will be drifting. And since ES is derivative of SPY and SPX, everything starts from SPX, right? And then they have ratios. So then we are better off. Now SPY is open early morning. They close by after hours. They are still trading going on the share side. You can just get some ideas from there. Same thing. All these stocks and the SPY, they start opening early morning now. Futures on the right side is open all the time, right? As you guys know. So we're gonna put this matrix into a bias direction. So instead of just doing a 2-point scalping, we're gonna do 10-point scalping. 10-point scalping 3-4 times a day. If you get lucky, just one. So you want to make $2,000 a day per contract if you can catch the whole thing. If market is choppy, we may have to try 3-4 times. Our goal is, in today's world where money is given free to trade, get to $20,000 a day, $10,000 a day, $5,000 a day, right? Think big numbers, which means you need a lot more knowledge as well. So so you know what this chart is. What is this? This is all free stuff. This is every software has it. Moving average ribbon, that's it. Exponential moving average ribbon. I just kept it to 10. I just put the default values, nothing else. All right, so I just wanted to explain what this is. So these 8 black boxes are cumulative delta of the top 8 stocks: JP Morgan, Nvidia, Amazon, Meta, Apple, Microsoft, Tesla, Google. So, and this oscillator is a complicated oscillator, but it is analyzing the cumulative delta. Delta, single bar delta is single bar delta, as we explained earlier. I need to see how multiple bars are interacting. Where is a drift? That becomes cumulative delta. Early morning when the market opens, it may be not really aligned properly, but We just want to see the drift. So I can create some bias. So that is what this is. So if you see all this oscillation is the same oscillator, all put on the 9 dimensions cumulative delta. All right, so what are we going to do now? Next, one good observation what we have to see is if this oscillation is as many oscillation points you can gather in one direction or the other, we are good. So let's start with the right side. All right, we fixed it. We have RTY now. So let's get back to our quick discussion why we are here. Let's just analyze 2 days and that should be enough. Let's start with, because so first of all, look at the green one. As I was saying, this is a green oscillation which is a smaller, smoother, and the orange one is much faster. If I'm looking at this point before market opens, what bias can I see at this point? ES is saying it's going to go down because both the waves are ready to flip over, and especially when the faster wave is inside the slower wave, it's called encapsulation. Usually it works very nicely. Okay, so ES is showing this behavior, NQ is not. YM is also, at least we get 1 point to go short. RTY is not showing it. So this, if you get a score from here, it's pretty much ES is the only one which is saying, because of this encapsulation, we are going to possibly take a short. YM is going to be following through because the same stocks are in the SPY as well. NQ is not showing any bias. In fact, it is saying will go up. NQ might have gone up. We don't know. We have to see that, right? Let's go back to the stocks now. Let's look at here. Apple, Microsoft, Tesla, this vertical. Apple, Tesla. Now Tesla has encapsulation. These guys are looking that they want to go short. Amazon want to go short. Okay, so if you look at all that, if you can just take the poll and say, so if I have to trust this, then I have to look into my oscillator. Let's go back a little bit. Okay, so this is where we are, right? So this oscillator is also telling it most likely we might be able to go short. If I do Fibonacci retracement, if I do my own other models we have, I just put my secret. I think this is where market maker boxes you have been seeing for a long time. So we have been at the bottom and this secret spot is put in. This is the box of reversal for market maker. So everything is aligning and I'm just looking on the right side. So these 4 are saying short is possible. Okay, and then we attempt to take a short. Now I haven't used my other scenarios here. frequencies and what we have discussed, and also the blue lines where those are. So this is a shorting situation, you can handle it. Now for people who want to wait and see, they have rules, 30-minute rule, hour rule, 90-minute rule, how they will see how the ranges are coming and expanding, which is fine, not a problem. All right, so from here I think our evidence shows that shorting scenarios might be good. And here what we have is the moving average on year. Now this, as I say, delta initially is gets researched and carried over. So initially it may sometimes work or sometimes not work, but eventually it will catch up with the true momentum of the market on SPY. So now this has happened. Now if you see, now this is the beauty of moving averages, is when they are spread out too much, the way 10 of these are, what we do is when they gets very close, deep into it, we have an oscillator, and then we have this pullback, we can use those moving averages in that fashion. All right, so even though the direction was coming up to go short in this area, it was our reflective point, which we teach in level 1. It is where it goes, every vibration goes. We have made so many videos on that. It's called C54 boxes. People who have taken the first course, they already know about it, and they are in a different stage of their life now. So anyway, so there we go, right? So this is what it is designed to do. So you just have to, before you make a trade, like a snap, if everything is trying to go long, shorting may not be a good idea, correct? So let it pull back into the moving averages at least, or you use our magical things, what we have going. Okay, there we go. So I don't want to keep spending time on that one. So this is how you have to combine things together. You need a lot of automation, and we have done a lot of automation. So okay, so here you said you want to wait, let it come down. It could have just gone. That's fine. It can, as it did, right? It went down 20 points. The first 15 minutes. This is a first good opportunity. If you waited, right? And this is the first thing. You've got the oscillator here telling us to go short again, short again, short again. This one is good because we came too deep into the moving averages. Look at the oscillator on SPY right there. This is the oscillation of the cumulative delta trying to go down. Okay, this is volume delta on the top. So this is volume delta, this is delta bar, this is cumulative delta, and all these bar types are free in this software. We already discussed that earlier. Let me show you again. All right, so let's do this. In multi-charts, I think nowadays in every software, you see this one here. You have so many bar types, which is all free. You can construct your own Ranko here as well. Don't have to buy any of those things. On the bottom, you can see we have volume delta, cumulative delta, bar delta. Bar means bar by bar, footprint. What is the net delta of the bar? Who owned that bar? Cumulative, I explained. Volume is footprint, which we call in volumetric in Ninja, right? Same thing. Everything is there. They have it for years. So this is where it is. Now we haven't looked inside these bars yet. I just want to give you a bigger picture first, right? That's all there is. Now at this spot, let's say you decide, okay, market is heading down, whatever logic, and you saw this. What do we do now, right? So here delta is saying is going down. Now look on the right side. Google, JPM, NVDA, Amazon, Meta, and Nasdaq are with us. This is how something is going up, something going down, right? So if I look at ES alone, short was here, right here on the top, which we discussed. Now I'm trying to short here. It's not, ES itself is not ready to just give you exclusive just on ES alone. And it is here, at least if I'm taking a short. Now market went in a chop, but at this point, you have to make a decision on every point like these, right? Now these are Renko bars. You'll be putting a limit 2 points below. This is where you need automation, but here it is, right? So what do we do? So I just told you what I see. So this is cumulative, not price based, right? If I show you the price based, then it probably will be heading down, but you can just see right here itself because oscillator is going here. Let's do one thing. So I'm not going to talk too much about it, but just wanted to expand your thoughts a little further. You can see here I added the delta for ES, delta bar. I added a moving average of 3 bars as well. Exponential moving average, length of 3. So first thing, we want to see the drift, right? What is the average drift? Now this is how the cumulative delta gets created, because looking at X number of bars and see where the drift is coming. So just wanted to make that point. The patterns we have to see here is when the moving average, the tops are being hit again, and that it could happen on any side of the equation, the top side or the bottom side. We want to see that we know that the extreme has happened, right? This is where you talk about flushing the stops and getting exhaustion, or great terminologies like these are invented by marketing, but ultimately what's going on is the footprint is getting exhausted one side or the other, because ultimately this is all bid and ask story. Hit the bid, hit the bid, hit the bid, hit the bid, take the market down. Hit the ask, hit the ask, hit the ask, go up. That's all there is. And we find patterns under those conditions. So just let's finish the story. This is where you can see the moving average let's put a line here, horizontal line here, right? This is a moving average, because remember this is going to be rotation. We are trying to see the rotation. Market may be moving, as we have discussed earlier, sideways, but it is still rotating. But if you flatten it, it becomes like this, and this is what delta is showing here, right? So it will show the same cycles. You cannot see, this is where this was created, right, to smooth it out, but you got the idea. I'm just showing you the raw data, so you know what you can do with this in your own trading. Okay, because all these things are available in every software in modern day technology. You just need to understand this so you can think through this a little bit deeply. It's a thinking man's game. So I posted that the top side, and we can post it on the bottom side. And what I said is, what I'm not showing you is our C54 levels, our levels, right? The magical levels you've been seeing for a long time. So let's get to this discussion. As I said, we took the historical moving average stretches from here and we put it here. Now you see we are getting into this upper and lower boundaries. You can also put it here, right, for the extreme conditions. And I also told you that when this is happening, you're looking at turns. It can happen in any direction. So that's a bigger discussion. So at this point, delta was positive, but it hit. Now I have this location. Since we did not take the open trade, we are still at the open. For the last 25 minutes we are just discussing opening only. All right, no worries. So the evidence is piling, and it's all pattern. If you just look at, take a picture from your mind, excuse me, you're good, right? So this is where we took a shot, and this is where it pulled in to our ecosystem, right? So it pulled it here actually, and you can see the delta on SPY is telling us it wants to go down, and we already discussed all. They are showing the same thing, cycles. The way I'm showing it here, this is what is going on here on cumulative delta, so you can get some cycles. There are a lot of patterns of divergence, this, that, but you got the idea. All right, so we got this trade. If we got lucky, we got it exactly 2 points below or 6 ticks below, because it could have just kept going, right? So we don't take the market trades. We let it happen, wait for it. All right, but we have not seen inside the bar anything yet. So let's say we take this one. Okay, the same pattern showed up here second time. So this one also you missed. Now this is another opportunity. Again, it came down, came back into it. Look at the same, look at the SPY, look at all the analysis I showed you, and see if this is a good opportunity for you or not. As we discussed that, Nasdaq is telling it is. S&PY on the cumulative delta, not the price. Price is here. Price is telling it's going to go down. Nasdaq and few stocks are collaborating with us. Right here on this row, you can say this looks like, and so 1, 2, 3, 4, 5, 6 things are saying, okay, there's a potential short that can take place. 1, 2, 3, 4, 5, 6. That is correct. Okay, but that's how it is. Now, if you're really a patient trader, when everything goes to the top and everything goes on the bottom, you get 1 or 2 trades which you can do for swinging trading, right? So we had this extreme push down. Look at the moving average, but remember, this is not the bottom. I told you it can come on any end. So this happening, if I look into the bar, it's telling me what's going on here. We'll open it and see. Okay, so again, short is here. This extreme thing is coming. That means a trade is, some reversal is coming on the top or the bottom side. Okay, so here it showed the top, here it showed the top, but look at this, moving average was on the opposite end. That's the point I'm trying to make. We are looking at the extremes points where we can trust the reversal, because one side inside the bar, this is going to create the T pattern we talked about. This is how the T patterns are created. One side gets excited, pushes the value to the extreme, one way or the other, or some reversal is coming, right? If our market is going down, 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 I see a T here in the bottom. This is my lean stop loss. I want to go long, right? And I'm looking for evidence, and it has to happen fast. It's all just practice. All right, so you got it. So ultimately, that's all there is, right? Eventually, this guy will gonna catch up. Early morning, the settlement is going on. Sometimes it just starts early morning correctly. That's why you wonder why this guy is going down. Remember, this is cumulative delta, right? So anyway, so now this is now, if I wanted to use this as a long, that hey, S&P is showing it's going to go long. Okay, so we have to wait for something. It's the line on this side to the bottom side. So this is the bottom, this is the bottom. You can see we are at the extreme. Okay, this is a reversal is coming. Now this time price is going to tell you which side is going to go. So here we go. And we can look at this cumulative delta also is saying we can look on the long side. Here and here and here, like this is moving fast. And here. So these are the long locations also for scalpers. So this one did push market a little bit up on S&P, and that showed up impact. So it reversal extreme area. Let the price align. Let the delta on SPY interact with this and help you. Now it got short. Now moving averages have gone flat, which is great. So now again, we're going to look into this delta. Extremely saying go short here. I want this guy, the moving average, to hit the band. More extreme it is, that means stronger the T is. Much to the, going back to the T. I keep talking about the T for months. This cross and this cross and this cross, the strongest one is this one, because the value has, the yellow box has extremely reached to the certain point where people got super excited or super scared, or they're looking for a breakout. We don't care, right? We have reasoning to enter the market more effectively. Now at this point short is suggested. I'm not going anywhere here. Extreme. Okay, now this, let's evaluate the extreme. This is not as extreme as this guy, but this was a great trade. This is on the top, this is on the top. Look at this is on the top, and on the right side grid we have 1, 2, 3, 4 all the RTYs, YM, NQ, ES helping us, and then we have Nvidia, JP Morgan, Amazon, and Meta, this second column from the right. And then on this is also, look at this now, like look at this right there, what I was saying. Let me just mark it. Look at the entire market cumulative delta. Apple orange down, Microsoft orange down, Google green down, Meta, I just talked about Meta, all the second row all right to go down. Future side, 4 of them are going down. This is 11 out of 12 score, and ES itself is to the extreme punch. This is the ultimate trade. That's what I was saying. Wait for all these to line up. It will be good to just have a scoring pattern here, some kind of a tool which will show us this. But you got the idea, right? It's a simple picture of through the eye. Boom. Okay, it's moving fast. It's getting here. It's getting there. So now you're looking for it, right? So you're not. It's happening in real time. So entry is, this is where you enter, 2 point below. This is where the polarity lines come into picture, which we have in Wave 59, fully automated system, which you have seen. Automated in the sense that all those things dynamically shift every day. Only thing you have to do is press the button. There we go. You would take 15-point trade. So if you just waited for a little longer, right? 1 hour 15 minutes you got the trade with everything lined up. So that's it. I think we had a long video. I wanted to explain that quickly. So now let's just look at this thing, and this is now gonna take over shorts only, and that's what we're gonna see. Shorts, and then we got some longs coming, then we see some shorts coming. Let's just go and see. Let's go and see shorts only, long coming, and there we go. All right. Now just let's do quickly have a look at this, right? So rise. So let it come down and pull back. Let the rise begin. And we can just wait for all this to come down as well, right? So let it be on the lower side of the equation. So this is how you can use the moving average. Pull back. See that, to the tick. Now to the tick is really a false phenomena, because you will be you'll not be able to do this by hand anyway. So to the tick level, but don't need to. So pull back. Since the drift is long, pull back and pull back. We are dealing with not taking and getting scared of not holding. Let it come in, pull back. Once you get in, stay in. Here, same thing. As I was saying, the extreme happened in one way or the other. All right, so now let's look into quickly inside the bar, unless I think you have seen it, the evidence I'm presenting for you can do this all for free. Besides these oscillator, everything I'm showing you is free. Let them expand, stretch out, let it come inside it. Right here. This one is great because remember, encapsulation, pull back, encapsulation. So everything's lining up. So everything is predictable. Now you have to take the bias in this direction. Let the SPY help you push the things down. I mean, talking about 20-20 point moves. So where is the trouble coming from in the trading world is fear. Fear cannot do much with fear, right? Now if you get fearful, you can trade ES and NQ as hedged trade also. That I cannot discuss in the open. So let's just do one last thing, which is see inside the bar, just to solidify this concept. We are making a bunch of videos just to help you guys as much as possible, right? You guys are spending time listening, reading, so what we are sharing, so hopefully you can get some advantage from it, right? So now I just look at this guy, short potential you can take. Now remember, this delta based swings can be a little bit off. You cannot use this as a top tick and things of that nature. That's why we have to wait actually for our oscillator to show up, and then we can justify our reasoning the way I explained. If that is too much, you can just use this. If you wait for 11 score, 10 score, you make $10,000-$20,000 a day with 10 lots with free money. All right, extreme is here. Everything is lining up. So let's look inside the bar on SPY and this area. What's really going on? Let's mark it. And now let me just zoom in and let's close the video. Well, this is gonna move fast in real time. You can see it's gonna move fast. From here to here is 2 minutes, right? So and there is our value moving up and up and up and up and up and up and up, and oscillator is saying some short may be coming soon. So there we go. Right now, if you look at the contracts, right, SPY shares have huge contracts. People are using it for hedging and whatnot. I want value to be punched, 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 and pushed. Now you can see in the top 20%, top 25%. Let's look closely. And there it is. The T of interest. So you can use SPY options also on this, simply the way I explained, right, intraday, but that's not the point. So you can see they were 17,000. Now if this happens, you will also see a big number like this inside the value bar. Let's go down. Like this. So this is where the initiation took place on the short side. So you need a high resolution monitor, obviously, to see it. If you want to see the numbers inside, or you can just slow it down as well. So that is what was going on. And you have your call and put contract in the trading dome put in place, and you just hit the button. All right, so you buy $1, $2 contracts, they're up 10%. So you do like 3-4 times a day if you want, if you are that kind of a person who are looking for percentage scalping of options. All right, so just wanted to showcase what's going on inside that bar during that time, and that is why you have the bar. So we are looking at the bar colors, right? And here these are the values. This is the same bar we analyzed by opening it. Not this one, sorry, this one. So once you see this wick, you guys all know about wicks. Sellers have come in, but now you know a lot more about wicks by series of videos. What's going on? So the delta was, value went higher high, delta went higher high. We want to delta to flip. So then it flips, then cumulative delta takes over, showing us the bias. And this is what I was saying, this oscillator is based on the cumulative delta. It may take few bars. This is where this also can take few Renko bars. This is Renko bar, 6, 7, 8, 10 points before it can really turn. So you'd never enter the market, especially on these non-time bars. We have a displacement order placement, which means you will have in your trading scenario, when this location is identified, short below this. That's all there is. And you can have automated, I think there are a lot of people doing this, sell below this, stop loss is this, 3 point. So instead of scalping, my point is, once you're in the scalp, stay in it. You can use the scalping mentality to be precisely entering, and then you make it into a swing. 10 point, 3 contracts, $1,500. You do it 3-4 times a day, up $5,000-$10,000, and you're good to go. Thank you so much. I think went way long than I expected, but I wanted to make sure that you can understand. You can use this volume to get the endpoint extremes. It could be on either side, so you can make a decision which side market is going on ES, SPY, and all these metrics. And you have another trading dome, which is a valid scenario. So, and don't be afraid of, if you see these two things coming together, just put a line there. Now they will become a reference point for the future. And these reference points can change because of the volatility changes on a daily basis. So this is not a overbought oversold. This is a sentiment shift. Sentiment shift is expected here. Oscillator on the price will tell you which direction they are going to go. Sentiment shift is expected here. Oscillator is right in the middle, is most likely. It could have gone down and gone up. It went to the extreme on the other side. Sentiment shift was expected. These are created, and here we go. And not to forget, I mean, you don't have it, but we have our C54 market maker levels at play. Same thing. Shift is coming. 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 It doesn't tell you how deep the shift is going to come. And once you take off and you're entering it, so less shift is coming. Shift is coming, but these are failures too. You can just see that. It stopped it, but the finish, it stopped it for a while, for a minute, and then it went on. And the reason for that is there's a C54 sitting here. C54. Let me just do it. So this is how we teach you the levels right here. The trend line, range, C54 right there. Big. That's the level it is going after. You got to understand the market. Now what are you going to expect? I'm expecting, based on the structure to be completed, and it does, we're going to take off. Right, so on the S&P, we were short all this time. And now you can see C54 came first. And we know that in advance. And we're expecting a shift to take place. Contract will be collected. So that's the difference between these guys shifting here, still going down. Level 1 people, initially when they started, they had this trouble because they were impatient scalpers. And when they start realizing, you know, wait for a 1 hour, 15 minutes endpoints. 1 hour controls, as I showed you in the last video, the trend changes. Because we reach that C54 structure, market makers are going to come and they will start initiating a new trend. As you can see here, So that is the difference between this guy extreme and this guy extreme. And I will be trusting once this has happened and once we are into this level, and this is the level of interest because of C54, and this is how you trade. Now you can see here, this is still, they have to now collect the contracts. They are waiting and collecting the contract, and there we go. Then comes the breakout. And what happens? Look at this cumulative delta on SPY. What are you going to do? Stay long. Right? You can put a breakout over here, right? This is where the breakout traders and pivot breakout traders all show up. They will show up here too, and then they will have a failure. They will try again, 1 time, 2 times, 3 times, but just do it 1 time and just do it properly through C54 and you're good to go. And there it is. And now this guy takes over. This guy takes over, right? So once you are in that system, there has to be a reason to get out, right? And it goes on and on. C54, C54. You can do it for smaller swings or bigger swings. Again, 1 hour, 15 minutes, a key to understand, to control the intraday. 1 hour controls. It buys is set up from 4 hours. It rolls into 1 hour and it is chopped into 15 minutes. 1 hour or 66 minutes is the right Gann number is used for such promising scenarios. All right, so this is what we already had discussed earlier. So there we go. So now this is going on. Now what's going to happen? The C54 has been reached. It's going to collect contracts and then it's going to start shifting down, and then momentum, then eventually all the stocks will catch up with this change. And what is going to happen? Sorry, what's going to happen next is you can see now this drift on the short side has started. So this is a good short. Again, moving averages are expanded, short here, right? You have to look at this on the left side, but just looking at this is a short area. That's why we say area. Qualify it through this. Look at this on the right side, very fast. More they expand from each other and pull back deep. Perfect. Now you've seen this pattern, all of them separated out inside the zone. You can see the exhaustion happen here. As I said, return of sentiment, right? It could be any turn and it could be any return. So right here, we are returning back into the prevailing trend right here. This is a deep is selling, the shift is happening, and then we have encapsulation. This is something you need to really pay attention to. And looking on the right side, you can just see the stocks. This guy is telling us short here, Meta is gonna, and then we have coming short here, right? So, and some short came here also already, right? So this is the way it is to treat. Now we have had a couple of series of discussions, at least 7-8 videos now on cumulative data, footprint. So let me just write it down here. Cumulative delta, bar delta, we have T shapes, right? Value. Now we have confluence of looking inside the bar is T. So volume delta is there, cumulative delta is there, bar delta is there. This gets fed into this gets fed into this, and we create structures, and we talked about this creating a moving average on the bar delta ranges. So we can just keep a bottom and tops on these, expect them to be exhaustion change. It doesn't tell you the direction, it says that you have reached some kind of extreme. Then you use C54, which is a banking market maker levels where turns take place. You know these levels in advance. Then we talked about using SPY cumulative delta right here. You can, again, everything is free, just have to put it together. Besides the oscillator, you don't even need that anymore because I gave you some ideas. You can just use your own oscillators, but this is how you can make huge money if you want to. More you meditate, you can control your emotions. All right, so what else is there? So I think, yeah, so footprint, right? Footprint is nothing more. We talked about this. Footprint is looking inside post trade, right? Footprints are post trade. That means it has already happened, and we are looking inside the bar. Who is controlling, which side is controlling it, and then the values, because of who is controlling the bar, values are always in balance mostly. Then it gets out of balance. Which are our interested turning points, and where? At market maker C54 levels. Just keep watching this for 1 month and you will have a great success. You can do this with stocks. I just showed you with SPY. I can put any stock you want and do the same analysis, and you're good to go. Thank you very much.